Good morning, everybody. Welcome to the game plan. My name is Gareth Soloway, Chief Market Strategist here at VerifiedInvesting.com. So listen, we had a rally on Friday. Markets really just closing slightly higher after being up further. We did see a sell-off on Friday early afternoon when it was announced that Canada was going to be imposing a digital tax. And again, kind of took the Trump administration by surprise. They said, okay, well then all trade talks are off. And lo and behold, this morning, that tax on digital services has magically been rescinded by the Canadian government. So really a whole lot of nonsense there going on. Markets, for the most part, were ended positive on Friday on window dressing, are up in anticipation today on additional window dressing. Remember, window dressing is where the big institutional hedge funds, they want to make their portfolios look as pretty as possible for their clients. So they end up kind of buying things that have been really good or best performers for the quarter going into quarter end. Today is the last day of the quarter. All right, other than that, things in the Middle East continue to be a little bit on the quieter side. So the markets have no worries in that respect. And the animal spirits continue to keep hold, meaning retail continues to buy even with the markets at all-time highs. All right, let's take a look at the charts here and see what we have on the charts. So we did see, again, this is Friday's price action. So we opened here on Friday, we rallied higher. We then had that late day kind of mid-afternoon sell-off, and then a big surge up into the end of the day, whether people got wind that Canada would be rescinding those or maybe it was just window dressing into the end of that Friday, going into the end of the quarter. It's hard to know, but either way, big rally back up into the end of the day, keeping the S&P positive. Now, last night at 6 p.m., the markets and the futures opened. We did trade up, then a bunch of sideways kind of chop, and that's where we are right now. So markets are up right now. S&P is on slate to open about 20 points higher as we get into the trading day today. And remember, today is the last day of the quarter, right? So quarter ending today. And then later this week, we have holidays, I believe a half day of trading on Thursday, and the markets are closed on Friday. Holiday weeks tend to be neutral to upside in terms of a bias, although you just never know if any new headlines will come up. Now, remember, July 9th is that deadline for all these trade deals to be done. As of now, we haven't heard of any trade deals that have been really completed. The UK, you could argue, okay, the UK, yes, but it was a partial trade deal. There was a trade deal on rare earths with China, but just on rare earths. But overall, a lot of other countries, we don't have any announcements yet. The question is, will these start coming out fast and furious, or will Trump just extend the deadline for these deals? Will he essentially taco the trade war? We'll have to watch and see. Okay, back to the charts we go. Let's flip over to the S&P 500 and go to that daily chart that we have been watching like a hawk. This is that retrace to the scene of the crime. We came under it on Friday. We did not hit it. Let's see if today we officially hit it. It looks to me, if we look at the daily chart, it would be right around 62.15 on the S&P. So watch that 62.15 level to see if we hit it. And if we hit it, do we break above or pull back below on today's price action? Now, going to the NASDAQ, this is the intraday NASDAQ. So you can see we're gapping up on the tech-heavy NASDAQ 100. As again, we are seeing many stocks like Meta approaching all-time highs, Microsoft at all-time highs, and obviously NVIDIA at all-time highs. But going to the daily chart, here's that same trend line we're following. That's right now, it looks to be around 557 would be a retest of the scene of the crime. Now, I was doing a little bit of additional looking at the charts. Like if we go to the chart of the S&P and we take this trend line away, we go to our, let's go to our monthly chart and we flip over to our logarithmic view. So remember, the logarithmic view to me is the scariest chart that I have seen in years. Now, why? Well, basically you have this high from the 1929, just before the Great Depression. And we know the markets collapsed like 85% during the Great Depression. We then have a high pivot here with the dot-com collapse. And if we look here, we hit it and immediately we had the big fall, but now we're coming back up and we're just under that. And this trend line on the log chart is right around 62.50. So just again, I always look at all angles, right? So what I'm saying to you guys is if we get through the scene of the crime, where would be the next big target? And that would be just a little bit higher at 62.50, which is pretty remarkable because both of these levels, both the retrace to the scene of the crime is around 62.15 to 62.20, and then just 30 points higher is this major trend line that literally every time we've hit this trend line, we've had a big collapse at minimum 20%, right? This was a 20% drop. And over here, it was obviously more than that. And then the Great Depression, it was way more. But the point being is there something that's going to occur here that's going to have us come right back in off of that logarithmic chart? And then lastly, as always, folks, the NASDAQ chart, the NASDAQ composite is an important one here. If we flip back to our regular trading, this is a level that I'm following very closely if we get above the scene of the crime on the NASDAQ, which would be this 20,900 level, right? So right here, maybe 21,000. Again, if we look at low COVID, so the low pivots were major market pivots, right? Here's your low from COVID, your bear market low. Extend that parallel up, and again, that's exactly what this is, right? There's a parallel line. So extend it up to the high of the bull market in 2021. It gives us the exact all-time high on the NASDAQ over here in December of 2024. And then this big collapse, and then we're pushing back up. So in theory, this level should be a big level as well, right around 21,000. So again, remember, as a trader, you don't necessarily know. You have probabilities that are telling you, okay, this is a level to watch. But if you break that level, you have to have another level. What's the next major level? And again, it's important for us, even if I'm more on the short side of this market, which I am, there's no doubt about that. But it's important for me to know that, okay, well, if this level doesn't behave and it doesn't pull back, where is my next upside? And luckily, it's not very far away. And again, I'm slowly accumulating my shorts on this market as we get higher and higher on this rally from the April 7th lows. All right, let's get back into the charts. Let's take a look at the Russell. The Russell is still a huge red flag to me. The mere fact that the Russell, which is 2,000 stocks, is not at all-time highs versus the NASDAQ 100, which literally 50% of the NASDAQ 100 is the mega cap trillion-dollar companies, right? I mean, so again, you know, what this tells us is when you have a market that has 2,000 stocks in it that is still, you know, basically 13-14% off of its all-time highs, it tells you that this is not a broad-based rally. It is a skinny rally, essentially a rally being led by the mega caps in the market. And so again, the Russell stocks, the 2,000 stocks in the Russell, they are not participating like the rest of the mega caps are. So the mega caps are leading this. As long as the mega caps keep going, obviously the NASDAQ and the S&P can keep going up. But again, what does it tell us about the underlying economy when the other 2,000 stocks here that are kind of mid caps, small caps, and even regional banks cannot perform with the mega caps? Something is lurking there. Something is amiss. Quickly looking in on the 10-year yield. 10-year yield is slightly lower today. The Dixie, the DXY, is flattish on the day, but still below key support. Now, another scary chart or charts that I want to show you guys, we got to look at the EuroUSD. Now, most of you probably don't look at this on a regular basis. You might say, well, yeah, you know, who cares what the euro versus the US dollar is doing? But when you're thinking about dollar de-dollarization, right, where global economies and global superpowers and other countries are starting to maybe diversify away from the US dollar, you have to be aware because this will have long-lasting impacts on inflation here in the US if the dollar starts getting dumped and becomes weaker and weaker, right? Think about all the stuff we buy globally, right? So we're already seeing tariffs being imposed on that stuff. But now what if the dollar weakens precipitously because all these other countries say, you know what, we don't want to be beholden to the United States. We want to diversify away from US dollars as the main reserve currency. And the reason I bring this up, guys, is look at this, right? So this is your high going back to 2008 on the EuroUSD, so the EUR-USD chart. And basically what this tells us is that since the financial crisis, the euro has been in a downtrend against the dollar. It's been going down. The euro against the dollar has been going down. But look at what just happened in April, okay? In April, coinciding with Liberation Day, you got a big breakout on the euro against the dollar. Now, what this tells us is that the long term, literally 17-year trend of the dollar strengthening against global currencies is now over. I repeat, the dollar strengthening against global currencies, that domination has now been broken. And what this tells us is, and again, it's not to say the dollar won't have bounces where this will pull back a long time. But this downtrend now, you're going to probably go up to, this is my short-term target around 122 on the euro. It pulls back, then it breaks out, pulls back, breaks out, goes higher, etc. And that is something that is very, very, as a U.S. person here in the U.S., right, we have to be very aware of this. But even global investors need to be aware of the dollar potentially starting a new phase of weakness going for the next 10, 15, 20 years, or maybe even longer. The other chart that is unbelievably scary is the US dollar yen chart, the dollar yen. So if we look at this, take a look at this pattern formation. The dollar yen has a head and shoulders pattern. And if this were, by the way, look at the bear flag starting to build here in this right shoulder. Shoulder, head, and shoulder. And we know the dollar yen the head and shoulders pattern is a bearish technical pattern. Now it triggers when you break the neckline, right here. So it has not triggered yet. But this down move with sideways bearish action, that implies another leg down. And if it breaks the neckline, you know where you're going on the dollar yen? 118, which, by the way, for those of you that aren't in tune with currencies, that would mean the yen would be increasing its value or its power against the dollar. In other words, the US dollar would be weakening against the yen. And again, that would go right along with the euro, right? The euro is strengthening, the yen would be strengthening, and ultimately the dollar is weakening. All right, so all of these have big consequences, maybe not in a today motion, but you have to understand the bigger implications of de-dollarization that looks to me, and listen, this is going to be a 20-year plus process, but it's beginning. It has begun, folks, per that EuroUSD chart. All right, on to a few other charts. Here's your chart of NVIDIA. I still think it has decent upside potential to about 163, pivot tops to pivot tops. That means that this would be the expected level if price gets there, which is only about $5 away from current levels. This would be where you would expect your next big pullback. If we look at this, big pullback, small, but then it hits it again, bigger pullback, then it hits it again, and huge pullback. So at some point here, this marks the top, X marks the spot essentially for a pullback. Microsoft, again, you're in this little bit of a parallel channel, but I do have this longer trend line here that if we get up to about the 512 level, which by the way, we're basically $15 away from that, which on a $500 stock is just about, I would say it's about 3%, right? About 3% away from Microsoft. So you have NVIDIA about 3% away from its major resistance. Microsoft is about 3% away from its major resistance. And remember what we were just talking about, how we're watching to see. So we know the Russell's not participating. We know that the markets are near these major long-term trend lines, a little bit higher. But here we also see that the mega caps are confirming that. Maybe a little bit, 3% more up in NVIDIA, in Microsoft, and a few of these others. They slam into these big levels, and then we start seeing a bigger move. So again, I'm basically what I do as a technical trader is I start to look at the key signals, like where is the NVIDIA resistance, the Microsoft, and what about the markets? And then do these things coincide? Can we align these things where it starts to make sense? Right. So again, for instance, if you had a bull flag on NVIDIA and it had upside for another 20%, but then the stock market was near a major high, you'd say, wait a minute, that doesn't make sense. Because NVIDIA is a now almost $4 trillion company. NVIDIA needs to basically confirm a market top because it is such a behemoth in the market. Speaking of behemoths, by the way, guys, the sale we've done for Investment Empowerment Day, it was supposed to end today, but a lot of people emailed and said, hey, I'm just getting paid on the 30th of the 1st. Can you extend it out? So we're going to extend it out to July 4th through July 4th. But again, that's the last extension I can give, and then it is done. So you still have time if you are interested in getting any of the courses that we sell here at 50 or 55% off, as the Winning Trader series is. You still have that opportunity. All right, back to the charts we go. Let's go. This was one of my favorite short trades, guys. I don't have a position yet, but I'm eyeing it. Booking holdings. Look at this long-term trend line. It's just about to hit around $5,750. So right there. So look at that. And then also think about the airlines saying that travelers are down, and Booking Holdings is a traveling online website. And then also think about the COVID. The data is now showing that people are over that kind of that burst of traveling that came after being locked down for COVID. So all of these, plus the fact that a lot of international travel is being canceled to the US because of everything going on, all of these to me say probably one of my most obvious shorts here is Booking Holdings on that, as again, it is at the highs of the chart. All right, HPE this morning is up on the DOJ settling a merger dispute, antitrust with Juniper Networks. So we see that Hewlett Packard was up quite a bit. It is pulling back. There is a key level here that I want to show you guys that I'm following. Again, if we take this trend line right here, this upsloping trend line here, and then this pivot top, look at how they intersect. So right around $22 on HPE, if it gets up there, that to me would be a good two-factor shortable level. Bitcoin, look at what it did, guys. So we have this down-sloping trend line. Look at basically overnight, we just kissed it at around just below 109, and it's pulling back just a shade. So the question is, can Bitcoin break this level? If it does, it goes to 113. If not, this is your support at 100,000, just above 100,000. We have our previous pivot point right here, across here, major technical support. So we can watch this and kind of follow it accordingly. Let me just bring that back into the right level there. But again, for the most part, again, we're watching 100,000 and then 109 approximately. Whichever one breaks, we should see that move up to this level. Or if this breaks, we go down to this 95 to 93,000 level. Gold, guys. So gold, again, is trying to recapture the trend line it broke on Friday. I've been kind of alerting you guys that that might be ready to happen. It did close below on Friday. It has not confirmed yet, so be aware of that. But nonetheless, slightly up. But notice how gold was above this trend line, but now it's already back below. That's telling me there's a little weakness there that may tell us it's not going to recapture and eventually fall down here and here, in which case I start buying heavily at this level. Maybe this is going to be the spot, but for me, I'm going to look for a flush out, and I'll start buying on a swing trade basis around that 29.50 level. Silver, let's take a look at silver. Silver not doing much really since this breakout. Silver has just chopped sideways. I would make a case that it is still making bullish consolidation. So if we look at kind of this downslope here, right, and then we go here, you can see kind of, to me, this is a bullish consolidation. I still would like to see it back to around 34.50 to 34.70 on the chart of silver before I pick it up. Oil, I'm still long oil. It hasn't really done anything, frankly, since we got in. Again, I was short up here. We got great gains on that fall, and now it's just chopping sideways. And my concern here is it making a bear flag? It's not a mature bear flag, but I have to monitor this because if this goes sideways much more, it actually could start to break down. So I may just have to take a flat out on this. I'll keep an eye on it and see. But again, I don't like the fact that it hasn't had a bounce yet to the upside, as it does create more of what's starting to look like a bear flag. And then lastly, natural gas here, guys. Nat gas, after that big pop on Friday, reversing right back down. If it comes down here and takes out this 338 level, we should be headed right down here to 310. 310 looks pretty interesting, though, as an opportunity to buy. So I will keep you guys posted on that. All right, guys. So listen, it's Monday, the last day of the quarter. It's a week where we're going to get the jobs data. So we have JOLTS tomorrow. Wednesday, we have the ADP private sector. And then Thursday of this week, we'll get the jobs number. I would be surprised if it's a bad jobs number. The reason I say that is because it's almost unheard of for them to release a bad jobs number before the July 4th holiday weekend. If it's going to be bad, they would postpone it till next Friday. I've seen this happen a million times. All right. Now, listen, I mean, maybe in some weird way, Trump wants a little bit of a weak number to push the Fed to cut. I guess maybe you could make that case. That's the only kind of caveat in my brain that I'm thinking about is like, okay, would he want a slightly weaker number? But for the most part, it's very rare if they're going to be reporting that number that it's going to be a bad number. Now, listen, could it be a little weaker than expectations? Like instead of 150,000, 100,000? Yeah, I mean, that's a little weaker, but it's not super weak versus a negative number. All right, so watch all of that. Let's keep an eye on this end of quarter window dressing today and see what happens at the beginning. But remember, it is a short shortened week. All right, you guys go ahead, enjoy the rest of your day. I'll be trading in the live day trading room. Come join us there if you want to make some money. I'll talk to you soon. Take care.